Welcome aboard, everyone, to a new session of charting across the board. I hope each one of you are doing great. Today is February 25th, 2025. Currently 11:30 a.m. Eastern Time, where I'm here in the beautiful state of Virginia. Let's navigate the price action on Bitcoin, where we are, where we were, what's next. As one of the favorite influencers, we're calling for 120, 150, 200K on BTC. You guys know we like to approach the markets objectively. Of course, respecting the legends of the past, the readings, the technical analysis that we normally do, harmonic patterns, conventional charting application, Fibonacci's, etc. If you are new and only jumping into this stream, welcome aboard. We are a group of traders who like to provide content from an unbiased perspective. All we do here is merely from, once again, an unbiased approach. I believe this is what is going to keep us profitable in a long-term trend. At least, once again, if you decide to do this as a career, a trader, a professional trader. Before jumping into the technicals on the price action for Bitcoin, please keep in mind that none of the following constitute any financial advice, but rather an interpretation of the technical information for educational purposes only. Starting the chart here, as you guys can observe in the price action, this is a schematic based on Wyckoff, the composite operator. We're calling, or we were leaning towards distribution schematic. However, we also gave the bulls an argument to defend themselves at the lower trend line of this trading range within the upper section, normally a distribution. Okay. Now, of course, in hindsight seems easier, but during the process, during the arguments, during this entire time where the arguments were presented, of course, there were some doubts, right, in between. However, now the argument for 70, low 80 is more started to make sense now, okay? To navigate the chart, we are going to navigate why these levels were in the cards and where can we go next, right? This does not matter now to us, right? We presented the arguments for distribution case at the last point of supply previously at the test, potentially a rejection from 105, while I believe expectations on the crypto space or Twitter was 120K, right? Again, we approach the markets objectively based on the application of these legends of the past. I won't get tired to defend their projects because over and over they keep repeating themselves from time to time, and this is a passion. Honestly, I'm not sure if you guys have the same feeling, but if you are truly a practitioner of the technicals, the proper interpretation, this is indeed a fascinating field. Why? Because we're dealing with market psychology, right? All we see here in the chart, these waves within the price action represent the fear and greed of market participants. As you guys know, while many believe price action will keep going higher, others believe prices will go lower, and so on. Interpretation of market value based on market generated information. Once again, this is a chart. Where are we currently? Previously at the test as resistance. Now the price action has indeed manifested. You guys can observe January 26, that was the interpretation back then without making any changes. However, we were giving the benefit of the doubt to the bulls after printing that beautiful Garley that was printed here at the information that was previously defended. However, that was a reactive move of the last point of supply, right? The second range after the test, another last point of supply, lack of participation of the men. Now we're breaking below the lower trend line of this trading range. Now, potentially a level of resistance where the shift in sequence of the lower highs or lower lows in this case, have now manifested. I apologize. I have the delay, the monitor in the background with the earphones. It's a little hard to coordinate the talking when I'm hearing myself also speaking. Practicing still make this better. Anyway, so here, after breaking below the lower trend line, where can we go from here? For harmonic patterns, you guys can already observe an M formation, right? We mentioned that failed Garleys normally tend to mutate into deep crab patterns or crab patterns. If you guys connect the anchoring points from the lows to the highs, back to the lows, back to the highs, potentially now that extreme wave of the move to where? To the golden mean, the golden ratio. 1.618 from where? From the lows, in this case, this segment of the move, from the lows to the highs. Once again, let's jump into the current information. This was only a replay, right? After we hit play, you guys can observe. I can also share this chart if you are interested into following this entire price action, okay? So now, moving into the current information, we can observe indeed that was respected, right? We're breaking below the lower trend line and now connecting new anchoring points. Once again, I believe we already mentioned this over and over. So we are only pretty much repeating ourselves, basically, since I believe last month, January. Therefore, the periods of risk are here. We're seeing selling pressure across the board, not only in crypto, of course. Risk off, right? So therefore, connecting the ABCD structure, where can we go? I'm gonna present all the variables I've been charting in the background and also sharing within the room as to how low can BTC go. At this point, the 70s are more within the cards. However, we first must break below mid 30s, or I'm sorry, mid 80s, not 30s, right? We're not there. Mid 80K, and of course, psychological level becomes at 80,000 region. We break 80,000. Of course, we have 76 and 74. Let me explain why those levels may be in the cards. Once again, this all speculation, connecting the anchoring points based on harmonic ratios, as well as other interpretation based on the Wyckoff schematic in this case, okay? Where can we go from here? We mentioned before that this point was indeed a key level to hold, and 1,000 as well as 89. Now, shifting sequence of lower lows. Lower lows, lower highs, lower lows, lower highs, and lower lows, right? There was no lower highs here, but rather now this is the shift in sequence, the change of polarity, as Steve Nissen suggests in his book, Japanese Candlestick. For those familiar or unfamiliar, I recommend those or this book if you're rather learning Japanese Candlestick and only reading the candlestick. Okay, very powerful tool also. Where can we go from BTC, or where can we go in the price action on Bitcoin? The arguments that I've been collecting for the 76,000 region come most importantly, just remember the bearish butterfly. Once again, was previous short execution, upthrust, the top distribution, another retest, upthrust after distribution, among other variables. I believe we have a shark pattern also within this segment of the move. We were mentioning that it was important to note other bearish structures based on the reaction of each of these patterns on the bearish structures, the W formations. Okay, therefore distribution was indeed in the cards. So where can we go from here? Again, we can connect all the variables, all the data points within the price action, and where can BTC go now? 76 is where we have an argument for an M formation in this case. Okay, connecting the lows to the highs, B point. This is the main point on harmonic framework. C leg, and now potentially the 1.618 for a bullish deep crab pattern at 76,000 region over spiel to 73 and change or 74. That can be the case, okay? And let me once again bring another argument as to why those levels can be once again in the cards. If I go back into another chart also within the argument of this distribution case, I had previously shared within the room that was an idea also for this chart in mind, okay? Of course, it was still a level to give the bulls the benefit of the doubt if they were indeed going to sustain this rally. However, now the composite operator manifested himself, pulling the prices lower. And I'm laughing because the space doesn't seem to change. I've seen other influencers, the Moon, I believe, Carl the Moon, calling for 1 million BTC, telling everyone that this is the best time to buy Bitcoin at 100,000. Maybe it is in the long-term trend, right? We never know. But as traders, we rather move accordingly. Why? Because now we are 22% lower from the previous high at 109, I believe. So again, objectiveness in this field is necessary. So once again, this is a chart previously also shared in the room. Another confluence, why those levels are important, because if breaking below, okay, the trending range, I'm going to also present another very easy interpretation within the conventional charting application, right? You guys can ignore the distribution schematic, also the information. However, the symmetry also matches from the height of this trading range to those lows after breaking below the trading range and negating the 0.618 from the lows or the highs to the lows in this case, from the upthrust after distribution, the UTAD here, to the LPSY, the last point of supply, rejection. That was a pending idea for the bearish 5-0 also discussed within our room, okay? And from there on, we were giving either type 2 return for the Garley. However, something to note is when bullish conditions are underperforming, this is a key variable telling us that something larger of a bigger magnitude is developing in the price action. What I mean by bigger magnitude is often implying the larger time frame, the weekly, monthly, and daily, and so on, okay? Normally, these time intervals tend to supersede any smaller time frame, and this is not me saying because I am a swing trader, but rather is how the markets perform, okay? So here, if we can go to those levels, okay, 76 to 74,000 region, what are other levels of confluence that I do have in the chart? This one, okay? Same argument. This is only connecting all the pieces of the puzzle from the distribution schematic to another M formation, right? The W formation here as a shark pattern in this case, potentially leading, this one is to 70,000 region, okay? But only wanted to make a point here because we have a different anchoring point of levels of significance. This one at the lows, I believe, was in the 60,000. However, that will give us 70,000 region, 69,700 and change, okay? Also 55,000, 50, the 50s are in the cards, but I rather move accordingly based on key levels. If we break one level, we then know what's next. In the same manner, we have been approaching this entire distribution schematic, okay? So these one are the levels of confluence. Once again, another rejection here, only to point out here why I was leaning more towards the downside, based again on the macro. The weekly time frame rejection were at the 1.618, the FIB arc here, the 1.618 from the lows to the highs, rejection. And many other variables also on the 5-day. I believe we printed a doji, another Japanese reversal candlestick suggesting turning point. This is what trading should be applied, or the way trading should be applied, understanding that anything can change at any given moment, correct? Because why when we remain biased only to one side, and also speaking with certainties as never working in this space, we tend to get disappointed, right? This is probably why I never talk with certainties, even though I do believe in my framework within the harmonic pattern framework, also respecting the TA from the legends of the past. I never try to speak with certainties. Why? Because over and over the market had taught me an expensive lesson. And it will continue to keep teaching me an expensive lesson. So therefore, if you like the technicals approaching from an unbiased approach, please make sure to either read the books, right? Many technicians coincide with the same proposition over and over. So therefore, this is what we do here. I don't want to derail and go off topic here, but to me, it's very important to approach the technicals, also mainly from the psychological standpoint, as Mark Douglas suggests, right? All we expect is when we put a trade, that something will happen when the conditions are there, okay? So going back into the chart, the confluence levels, distribution case, here is a cipher pattern in this case, right? From the highs to the low, 70,000. Before reaching or talking about 70,000, I would like to first reach these levels, okay? 76,000. This will be the most intermediate level. And from there on, then we can argue if we're going to go lower to 70,000 or 55 region. There are arguments, okay? Especially if we have achieved the fifth wave, right? What's the top end? If that's the case, the major pattern why we can go lower, only to present the arguments, I believe, this is the chart I had in mind and also share, I believe, maybe January, I believe, this year, that after testing the upper trend line of another ascending broadening wedge, right? What a coincidence, right? Of course, there are plenty of room to test the lower trend line within the 60s. A false breakdown will be pretty much within the 56, okay? Computing all the anchoring points from the main lows here from August, I believe, of 2024, okay? The highs, the entire segment of the move. So therefore, the interpretation here will be a pending information, a larger one that can take up until June, I believe. However, in March, we're expecting a potential cycle low, at least potentially in the 70s, an upward traction from the BEC, and from there on, retest of the previous trading range maybe as resistance, heading lower. Once again, this is all speculation based on the interpretation and also the intuition of the practitioner. Mine has been harmonics, Wyckoff, Fibonacci, of course, the main core of the M and Ws, right? Was an M, was a W, a valid one, rather than plotting any anchoring points and making projections to 1,020, 150 without a solid argument, okay? Of course, if I am biased, I would be going to go to $1 million, 5 million even, right? But let's approach the markets objectively first. Once again, another interpretation, a diamond pattern. Back then, I mentioned before that there was no data points connecting the lower trend line, in this case for the lower highs and the higher lows. Now, if we revisit this information, okay, these are the arguments. So first, okay, to keep in mind, distribution potentially to the 76,000 region. The main projection from here on, okay, from here on will be a 74,000 region, also within that CD projection, okay? That is a main projection based, again, on harmonic ratios that can last up until March 16th. So I'm looking for a cycle low in March 16, okay? And from there on, maybe a bounce to April. We will see how the price will develop then. To jump into the current information, once again, and the argument here mainly on this price action, if you keep this in mind, the diamond pattern, okay, let's revisit that chart, because I believe this one was on the 3-day chart based on Coinbase. So if I go into my drawing board where all the fun occurs, let's go and revisit where that price action is. 1 second, guys. ECT on Coinbase. Okay, here we are on the 3-day chart. I'm loading the chart in the background. So here we are. It seems some type of voodoo, however, it's all technicals, right? Anyways, here we are. Interpretation. Many interpretations were occurring back then as distribution. Diamond pattern now breaking below the diamond pattern, also a pattern from Richard Schumacher. Normally, diamond patterns occur at the top, at times also as continuation structure. However, in this case, the diamond top in this case is being respected, at least so far, right? Interpretation, nothing changed. I didn't change any variables in this particular chart, neither on the distribution schematic for BTC. Okay, breaking below, we may have some bounces here in between, right? Because nothing goes straight down, but the levels that I'm looking here will be pretty much the B point. But normally for Elliott wave practitioners, this will be an A wave, a corrective wave, right, from the highs, assuming this is a fifth wave. Okay, I'm gonna do some basic Elliott wave here. We got the wave 1, 2, the largest one, the 3, 4 wave, the 5th. We're asking, how do an Elliott wave practitioner determines whether the 5th wave is in, right? I never know, but if that was the case, then the corrective wave will be, in this case, an ABC, okay? Based on the same interpretation from an information. Normally, this larger information is usually a Garley based on the Wyckoff, on a corrective wave from a normal or an impulsive 5 wave up, corrective wave to the highs, the A, the B, and the C wave, right? Something in this manner will be what I'm looking here in the long-term trend for another major information we mentioned before, previous structural resistance potentially becoming support, okay? But again, before heading into the 50,000 region, let's bring back reality and approach the markets objectively as to where can we go from here, right? Because of course we can make projections, but it is important for me to keep those levels in mind, okay? Once again, the most immediate target will be pretty much the 70s, I believe, at the 0.618, where we can also only compute the highs in this case. We can compute the weekly time frame. Let's go into the weekly, right, for a better data point in the price action. And compute a simple retracement, fib retracement tool. From where? From the lows to the highs, okay? On the macro, we have indeed tested where the common areas of retracement, which is where the 0.382, 86 tested. Next one, if there is no support here at these levels, we have the 50%, 79,000 to 70, and the 0.618, another confluence where we have the information, the pending informations on the weekly structure for Bitcoin. So therefore, we have tested a common area of retracement. As of now, the 0.382 is being tested on the weekly. Let's look at the momentum indicators. Where are we within the RSI or the MACD? The MACD, of course, we have a crossover. We mentioned that we were printing the second negative momentum on the weekly on the histogram island for the MACD, only starting to print here, right? Therefore, the selling pressure was still within the cards, knowing that prices could go lower. So therefore, weekly structure tend to outperform the minor time frames, okay? So keep that in mind if you're trying to make a long projection before heading to 120, 150, and so on. Make sure the technicals on the weekly are agreeing with that projection. Otherwise, we may have some misreading in the chart and make false projections, okay? Once again, 0.382 is being defended, 86,000 region. The next one, the 0.50, 79 will be the case, and the 0.618. Once again, we're looking here within the short-term trend because on the daily, we're printing oversold conditions, okay? This is the first time Bitcoin is printing another oversold condition since August of 2024, okay? We're entering here undervalued conditions, oversold conditions since August, right? The last time we saw an oversold condition was only last year in August. Since then, a rip on overvalued territory. Since then, greed was presented, and now fear is starting to present in the chart. Okay? All it is. Supply and demand zone, fear and greed. And one participant believe is high, the other one believe is low, and so on. Fun game. Once again, these are the levels that I would likely look for. Once again, the information, in this case, a pending information from the lows, or from the lows, generally lows, to the highs at the 0.618 or the golden mean. The 1.618 for a pending, as of now, a pending information. We have support here, once again, on the weekly. However, the weekly is not done yet. Therefore, what I'm looking now, especially if the previous low, okay, I'm going to mark here this low at 91,000. This now become resistance within the harmonic framework for what is known as the BAM, the bad action magnet move, a phenomenon that once breaking the B point, price tends to accelerate to the completion point of what it is now, a pending information. With an extreme wave of the move, if the selling pressure continues, we then have the 1.618 within the 76 to 74, matching the confluence. Once again, from this segment of the move from November, we have many anchoring points. However, we only anchor the most significant touches. In this case, the most significant support at 67, 66. Okay, that was a Garley, I believe, back then, that we missed the long here. Then we missed a short at 70, 77, 80. However, our approach has been more consistent than many out there, okay? From here, and this is not to give a pat in the back, but I believe it's important to approach the technicals objectively. I'm not going to stop saying this over and over. Anyways, here, pending information, right? The information of the 1.618 could potentially, in this case, now we have another confluence for a cipher, the 0.786, where lower risk, potentially higher opportunities may be in the cards. However, please do not expect this to go straight to those lows, because there might be some bounces in between, the same way we have experienced the lack of supply here, or demand in this case, at the last point of supply based on the Wyckoff schematic presented over and over since last month. Okay, now we're printing a new low. No, the lows were not in. Now we have a new low. When we go lower, always the case. When we go higher, let's see if those arguments are presented in the chart first before making any crazy projections out there in the market. Everyone, thank you for being here. Apologize if I'm a little, I wouldn't say mean today, but I get annoyed when I present the technicals over and over and they tend to follow suit. All right. I'll see you guys on the next one. Once again, I'm not trying to be mean, but only to approach the markets objectively. Why? Because I'm tired to seeing people losing their capital and also making bad decisions, mainly. I'll see you guys on the next one, and remember to stay positive, live a life with an attitude of gratitude. I'll see you guys on the next one. Cheers.